Tata Motors separated its commercial vehicles, CV, business to allow each entity to scale independently. Which strategic concept most accurately explains the benefit of eliminating long-term cross-subsidy between CV and PV units? Your options are: A. Capability decoupling. Separating businesses allows resource allocation based on unit-specific core strengths. B. Strategic congestion. Combining unrelated units increases the velocity of shared resource utilization. C. Integration synergy maximization. Merged units outperform due to identical operational priorities. D. Asset indivisibility constraint. Structural separation reduces the risk of stranded manufacturing assets. And the correct answer is option A. Capability decoupling. Separating businesses allows resource allocation based on unit-specific core strengths. With nearly 7 million retail shareholders, the new CV entity now has a highly dispersed ownership structure. Which governance concept becomes most essential to prevent erosion of investor trust? Your options are: A. Authority centralization. Management should reduce stakeholder influence to streamline governance. B. Supervisory entrenchment. Restricting shareholder participation stabilizes management control. C. Fiduciary transparency mandate. Leadership must ensure high-quality disclosure to offset weak concentrated oversight. D. Proxy alignment pressure. Small shareholders coordinate voting blocks to enforce strong monitoring. And the correct answer is option C. Fiduciary transparency mandate. Leadership must ensure high-quality disclosure to offset weak concentrated oversight. Tata Motors is described as an iconic company, making structural changes emotionally difficult for employees, group leaders, and the public. Which branding change management concept best explains this resistance? Your options are: A. Cultural detachment cycle. Employees disengage from heritage brands during transitions. B. Opportunistic rebranding drift. Frequent brand changes reduce resistance to restructuring. C. Elastic brand acceptance. Strong brands adapt seamlessly to any internal structural change. D. Legacy identity inertia. Long-standing brand symbolism slows acceptance of major organizational shifts. And the correct answer is option D. Legacy identity inertia. Long-standing brand symbolism slows acceptance of major organizational shifts. Chandrasekaran emphasized that CV and PV businesses have different customer segments, platforms, dealer ecosystems, and investment cycles. Which operational concept best explains why combining both under one entity reduces long-term efficiency? Your options are: A. Value chain symmetry. Identical workflows allow full integration of customer. B. Structural dissonance. Incompatible operating architectures weaken process optimization across units. C. Throughput concentration effect. Unified production lines improve speed and scale. D. Modularity inflation. Splitting similar units increases unnecessary component duplication. And the correct answer is option B. Structural dissonance, incompatible operating architectures weaken process optimization across units. Tata Motors CV is expanding internationally through deeper partnerships across Africa, the Middle East, and Asia. Which globalization concept best explains why partnerships reduce execution risks in these markets? Your options are: A. Embedded local advantage. Partnerships enable rapid access to local networks, compliance norms, and distribution capabilities. B. Sovereign isolation bias. Firms avoid collaboration to maintain strategic independence. C. Centralized global template. Headquarters imposes uniform expansion processes across markets. D. Autonomous market entry. Entering alone creates superior control over value chain outcomes. And the correct answer is option A. Embedded local advantage. Partnerships enable rapid access to local networks, compliance norms, and distribution capabilities. Tata Motors CV opened 29% above the discovered price and closed 27% higher. Which financial markets concept best explains why investors often price newly listed demerged entities at a premium? Your options are: A. Uniform pricing compression. Markets converge prices of parent and subsidiary automatically. B. Sum of parts unlocking. Demergers reveal intrinsic unit value previously hidden inside conglomerates. C. Liquidity entrenchment. Early trading reduces volatility due to concentrated block buyers. D. Float neutrality hypothesis. Listing increases supply, reducing the likelihood of price premiums. And the correct answer is option B. Sum of parts unlocking. Demergers reveal intrinsic unit value previously hidden inside conglomerates. Chandrasekaran noted an 8 to 9 year transformation journey for Tata Motors. Which organizational development concept most accurately captures such long-horizon enterprise restructuring? Your options are: A. Rapid cycle overhaul. Large-scale turnarounds executed within short, high-intensity bursts. B. Structural stasis constraint. Legacy organizations cannot implement phased transformation. C. Linear competency drift. Change occurs automatically over time without targeted intervention. D. Multi-stage renewal architecture. Organizations evolve through planned waves of capability building. And the correct answer is option D. Multi-stage renewal architecture. Organizations evolve through planned waves of capability building. Tata Motors CV highlighted downstream businesses like parts, services, smart mobility, and digital solutions as growth drivers. Which revenue strategy concept best explains their value in post-listing stability? Your options are: A. Residual value dilution. Service revenues cannibalize long-term asset profitability. B. Peak monetization spike. Aftermarket revenue surges only during new product launches. C. Annuity revenue engine. Recurring service-based streams stabilize cash flows across business cycles. D. Cyclical cash rotation. revenues fluctuate entirely with macroeconomic upswings. And the correct answer is option C. Annuity revenue engine, recurring service-based streams stabilize cash flows across business cycles. The CV entity is expanding across Africa, the Middle East and Asia through partnerships. Which global strategy model most accurately explains why this approach is effective in these geographies? Your options are A. Co-specialization model. Both parties contribute complementary strengths to build market presence. B. Autonomous export logic. Entering markets independently enhances strategic purity. C. Global centralization doctrine. Headquarters retain strict control to ensure uniformity. D. Transactional brokerage theory. Alliances are purely short-term and focused only on margin capture. And the correct answer is option A. Co-specialization model. Both parties contribute complementary strengths to build market presence. Chandrasekaran emphasized that both PV and CV businesses must pursue different ambitions after the demerger. Which human capital concept best captures why leadership must articulate distinct ambition narratives for split entities? Your options are A. Cross-unit role fusion. Employees operate interchangeably across both entities post-demerger. B. Strategic identity differentiation. Employees align culture and goals with the unique mission of each unit. C. Incentive neutralization. Removing performance differentiation to avoid inter-unit competition. D. Homogeneous behavior encoding. Employees follow uniform cultural patterns across all business units. And the correct answer is option B. Strategic identity differentiation. Employees align culture and goals with the unique mission of each unit.